let you know. Stick to your budget. You know your pace. Invested in the market. You know what you can make. Keep your dough safe. That's only if you serious about these money issues. Do you wanna know how to make your money grow? Do you wanna know? Do you wanna know? New age money makers. You know it's in you. Make this paper. You know who to speak to. Make your money grow. It's for the future. It's that simple.
Hele katlumba heso ke le dumedisa ke Mampo, and thank you so much for joining me. In the previous lesson, we looked at Joanna's cash flow forecast, which is also known as a budget. We also saw that Joanna had actually budgeted for certain cash inflows and outflows. But when we inserted the actual figures, we saw that they did not meet the targets that she had planned for.
I know, it was just bad news and then some more bad news.
Based on all this information, you now need to make some decisions for the future. At the end of the lesson, we asked all our viewers to think about what decisions Joanna could make to improve the profitability of her business. Let's think about some of them, but remember that there are no right or wrong answers.
Well, I just hope some of these might work out, because Mampo, let's face it, my business is going seriously downhill.
Firstly, Joanna reached an agreement with the wholesaler to buy a fixed number of bags per month, 40 in the first month and 70 after that.
That's right, but then I couldn't sell all of the bags that I bought from the wholesaler. So then the ones that I couldn't sell, I gave to charity, or I sold them at an even lower price.
Well, let's think about that. Do you think buying a fixed amount from the supplier was a good idea, or should you maybe have bought as you required?
That's a good point, Mampo, and I never really thought about that. I suppose if I had bought when I needed, then it would have been better, even if I was paying a higher price.
Well, you should think about that. There are also other factors to think about. What about your selling price? Do you think this should have been higher or lower, or was it correct?
Well, if my selling price was lower, then it means I would have been able to sell more bags. But on the other hand, if my selling price was higher, then I'd be able to make more of a profit on the goods I sell.
Well, as you can see, it's an issue that you will need to think about. You might also want to consider whether it was necessary to advertise. You'd have saved money if you chose not to advertise.
Well, now that you mention it, hey, you know, when I did more advertising, it didn't make any difference to my business.
Next, you need to ask yourself whether you should be paying yourself a salary.
Of course I need a salary. I mean, this is a business. I need something to live on.
But you might have chosen not to pay yourself a salary for the first few months, just while you were starting up.
Oh, okay. Now I see what you're saying.
You could also think about repaying the loan later.
I never really thought about it that way. So what are the most important issues, Mums?
They are all important, Joe. And if you want your business to succeed, you will need to think about all of them. But let's turn to today's lesson. In today's lesson, we are going to be focusing on how to use a profit and loss statement, or as it is often called, the income statement. Remember, we said that people go into business to make a profit.
You want to make money, don't you?
Well, it's very important to understand that there's a difference between profit and cash. Let's look at an example. Let's say you buy 10 bags of fruit and vegetables for 10 Rand each. What would your cash outflow then be?
Okay, so your cash outflow would be 10 bags times 10 Rand equals 100 Rand.
Correct. Now you sell these same 10 bags for 25 Rand each. So what would your cash inflow be?
Another easy question. That's 25 Rand times 10, which gives you 250 Rand.
So if we subtract the cash outflow from the cash inflow, we should be left with the cash in hand. That's 250 Rand minus 100 Rand, which leaves us with 150 Rand. Got it?
Got it.
Great. Now let's look at profit. The selling price of the bags was 250 Rand and the cost of buying the bags was 100 Rand. Profit is the difference between the selling price and the cost price. So therefore, you have made a profit of 150 Rand.
But I don't understand. Our profit is the same as our cash on hand. And you said there's a big difference. So what's the difference?
In this case, Joe, they are the same, but business is seldom that simple. Now let's imagine that you sold the bags of fruit on credit. This means that your customers have taken all the vegetables, but they haven't paid you yet.
Okay, I think I see where you headed on this one. If you're selling your veggies on credit, then it means that you have the same cash outflow, but you don't have any cash inflow.
That's exactly right. Let's take a look. You still bought 10 bags of fruit and vegetables at 10 Rand each, so your outflow is still 100 Rand. But your customers have not paid you yet, so our inflow is 0. But what about our profit?
I'm not sure, Mums. What about our profit?
Well, remember that profit is the difference between the selling price and the cost price. It does not matter whether or not you've received your money yet.
Okay, so it's actually like I've still got 250 Rand, even though my cash on hand is 0.
You've got it. That's exactly right. This is very important, so try to remember it. Profit is calculated when you make your sale, not when you receive the money.
Okay, I've got it.
But now let's take a look at another example. Maybe you bought the bags on credit. In other words, you are not going to pay for the bags now, but at some time in the future. What does that mean for your outflow?
Well, if I haven't paid for anything yet, it means that I haven't got any cash outflow because I haven't paid yet.
That's exactly right. Your outflow is 0. However, you sell your bags for cash, so there is still a cash inflow of 250 Rand. How about your profit?
My profit stays the same, right?
Correct. Your profit is still 150 Rand, which is the difference between your selling price of 250 Rand and your cost price of 100 Rand. Once again, we can see that your cash in hand and your profit are not the same.
For sure, I have 250 Rand cash on hand and I've only made a profit of 150 Rand because I still have to pay for the vegetables I've already sold.
Exactly. You'd be surprised at how many business people don't understand the difference between cash in hand and profit. They see money in the till and think this is profit, but often they forget that they still have items to pay for.
For sure, I'm sure they could go buy a nice flashy new car, but they'd get into trouble because then they still need that money to pay for the things.
Correct. So you see how important it is to know the difference between cash in hand and profit. But let's take this example a little further. If you borrowed money to start up your business, then this represents a cash inflow, but it does not represent a profit.
For sure, it's like a loan. You need to pay it back at some point, right?
Correct. You borrowed the money because you needed it to increase the size of your business and to make more profit in the future. Now think carefully about this. When you pay back the loan, how will this affect your profit and how will it affect your cash flow?
Let me think. This is an outflow of cash, so it might not really affect your profit, right? Because this is actually money that you don't have.
Well done, Joe. You are 100% correct. On the other hand, the interest that you have to pay when you borrow money affects both your cash flow and your profit.
I'm not sure I understand, Mums.
Well, it goes like this. Because you have to pay interest, it is an outflow, right? But interest is also an expense. It's a cost that you have to pay by borrowing money, and therefore, like all costs, it reduces your profit.
Okay, I see now. Paying interest is what it costs you to take the loan out. So it's an expense and affects your profit. But the loan on its own is not an expense, so it doesn't affect the profit.
Exactly, you've got it. It's very important to understand the difference between the loan and the interest you pay on the loan. When you pay back a loan, you are simply paying back money that was never yours. But when you pay interest on the loan, you are paying your own money to the bank as a charge for taking the loan.
For sure.
Remember that when we discussed the role of banks, we learned about how and why they charge interest when they lend you money.
So interest on a loan is basically the charge you pay to borrow that money.
That's correct. Before we go, I'd like to set a little task for all of our viewers. Spend some time sorting out the difference between Joanna's cash in hand and her profit. Remember, it's extremely important to know the difference between these two concepts if you want to run a successful business.
And please do as Mampo suggested, because I need all the help I can get with working out the difference between my cash on hand and my profit. And thanks again, Mums. Ciao, ciao.
And that's all we had time for today. Hi Papa.